welcome in our next guest. Let's see if Sampath Reddy is actually with us. He's our next guest on the show, and we'll get chatting with him in just a minute. Sampath, if you can hear me, thanks for joining in. Hope you're keeping well. What do you make of this mega financial rally that's playing out today? It's sort of out of nowhere. It's across large banks, NBFCs, and these are very solid gains coming through. How are you looking at picking stocks in this universe?
Yeah, hi Surabhi, I'm fine. Hope the same with you all. Just that financials are doing well. If you look at the results which have gone by in the Q4, most of the cases, the stress has not been as high as initially people were worrying. That has been the main reason. I think Q4 earnings have been much better than in fact most of the analysts who are afraid of. That was the main reason, I would think, and also the second wave impact is just slowly coming down. And probably at the end of this month, most of the places we could be seeing the opening of the economy gradually. So with that, I think the fear of the NPAs and the fear of the need for further moratorium kind of things have totally gone away. And that was actually the reason for, I think, optimism in the financial sector. In any case, the top private sector banks, which are very well run in terms of the credit exposure wise, if one was to look at it, they are relatively a lot less vulnerable. And overall, if you were to look at in the sector, in the segment where there's a little bit of a stress in the financial services, only the MFI space, barring that, I think most of the segments, whether it's NBFCs or the private banks, or they've all done exceptionally well in terms of quarterly performance wise. So I think that was the reason why we're all looking at doing better.
Sampath, hi, good afternoon. Prashant here.
Hi,
just a quick point. Does one have to make an assessment of whether, as cases go down, whether things go back to normalcy in terms of opening up, etc., or one doesn't really have to make that assessment? Or, I'm just asking that question because this time has been different as compared to last year. Because the young have been disproportionately impacted, which was not the case last year. So vaccination becomes that much more important for pretty much everyone, and that realization is set in, right? Should we expect a huge surge in spending, reopening spending, once things start to stabilize on new cases?
Right. So there are two things. One is that how much the stock pressure should be impacted by, let's say, 6 months kind of a lockdown, or even 2 months or 3 months kind of a lockdown. That's point number one. Even the history suggested last time also when the lockdown was there, which was there for a couple of months, it was quite severe. Post that economy did come back in terms of recovery path, and and that's one. And secondly, if you look at the stock market as such and its own performance wise, we've been arguing that even a 6 months or a 1 year kind of an impact on the earnings in the stock prices should not really dent the in a meaningful way. Ultimately, stock prices are a function of the present value of the free cash flows over a several years. So for that, 6 months kind of an impact in terms of on the earnings is not going to be much. I think that lesson is very well learned by the most of the participants in the market, and that's the reason why even though second wave is a lot more severe in terms of its impact on the overall fatalities. Even the second wave of the lockdown, which we are currently undergoing, the stock market is not reacting so much, simply because that very soon the economy is going to be opened up, and 3-4 months loss to the earnings or sales is not really going to impact the share prices much. So that's how I would see that. Yes, this wave is a lot more severe, and almost has happened all of a sudden. To that extent, the impact on the lives has been quite severe this time. But good thing is that the vaccine is there, and the vaccination is progressing quite well. So I would think that probably June onwards, we will be gradually opening up, and economy will be recovering quite well post second half.